Hey everyone, it is Evan here from the Trade Risk on Friday, December 6th, here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and finish off looking at some sector analysis. So we're going to jump into our dashboard here, take a look at what went on. It was a busy week. It was a volatile week for markets, which is the first time in a while we saw a flare up in volatility this week. But after everything was said and done, we ended up closing nearly green across the board in all the major indices. Let's get into the stats here. You can see Friday was a very strong day for markets, up about 1% across the board. If we look at the 5-day change numbers, you can see a little bit of red in here in the Dow, in the Qs, but the SPY and the IWM both finished green, and that is, of course, well above the lows that we saw on Tuesday of this week, which we'll talk about and look at when we get into the charts. So a nice recovery there. You can see this outperformance in small caps continuing. We are back above the 1050, 200 SMA right across the board. When we take a look at sector performance, we have energy at the top of the list, which is the first time in a little while. It's followed by staples and healthcare. And on the downside, we have transports, we have industrials, we have discretionary, all underperforming and red over the past 5 days. Now, if we go to major markets, you can see VIX still catching a bid here, up 7%, followed by oil and emerging markets. Pretty interesting, kind of curious bunch there in the top three. Of course, it's only 5-day performance, remember, but still an interesting basket there. And on the downside, we have silver, we have TLT, we have the dollar. So let's jump into the markets here. Let's take a look at charts now with the S&P 500. This is the cash market, and this is a weekly time frame we're looking at. You can see the S&P 500 with this long tail in this week's action. So good volatility here. Ended up closing green across into the bell here on Friday, up 8 points for the S&P 500, new weekly closing high. And again, if we just take a zoom out here, we take a look at where we went this week. We got all the way as low as 3,070. 3,073 is a little more precise here, but we effectively tested and broke below last week's lows, broke below the last 2 weeks' lows, and tested this little support area in here. Let's go down to a daily chart, take a closer look at it. You can see this small band here where we consolidated at the beginning of November is where the market ended up finding some support. Buyers stepped in at this upper level support area, and this really indicates how much strength and interest there is here in the market to catch even shallow pullbacks like we saw this week. At its lows here on Tuesday, we were 2.65% from the highs, from the all-time highs back here on the 27th. So remember, in keeping this in context, the S&P 500 has basically been up about 10% in a straight line. Since the October low here, the market has basically been in complete rally mode, and it's covered a little over 10% worth of ground with really no meaningful pullbacks to even speak of. This was the first time this week where we actually got a little bit of volatility, the first real signs of some type of pullback, and of course that got bid up really quick here, again at this upper level support, and we're right back at closing at new highs. So that is the encouraging part. That is the certainly the constructive note here, especially if you're long, if you're favoring this market. The trend has been defended. We're continuing to hold up. If we take a look at momentum here, we can see that we're starting to get some divergence in here. We're starting to get a little bit of declining in this upward momentum. That is never, it just doesn't work as an immediate sell signal, but it does give you some context here that this market is kind of dragging along here. It's continuing to push up, and it very well might continue for another couple of weeks, even a couple of months. There's no way to know. There's no way that this predicts a top, but it is something to tell us that we're no longer in a high momentum initial state of this uptrend. In other words, we're not breaking out. We're not suddenly starting a new trend higher. This is already starting to ongo here. And, the longer this stretches up with more divergence, the longer that price disagrees with momentum, kind of the more evidence that we have that potential pullback, more meaningful pullback is sort of looming. So I'd put that in the kind of the bear, in the negative column here for the market. If we look at the VIX, you can see that got as high as 18 this week. So we got a pop all the way from sub 12 all the way up to 18. That was about a 56% pop here in the VIX. That's enough to put in, which is clearly here, a short-term low in the market. You can see the VIX is pulling back here. Notice the higher low that's potentially going to be put in. We basically have the S&P 500 closing back at new all-time highs, but notice the VIX is nowhere near the 11.5 it was trading just last week when the S&P was up here. It's trading more around 13.5. Historically, both kind of, they're both low measures. So again, depending on how tight and how short-term of a trader you are and how much you want to read into this. But for now, maybe a little bit of kind of divergence there in the VIX, putting in a little higher low, which tells us that, the market still may be pricing in a little bit more uncertainty. Again, a 13 VIX is still pretty low. So all in all, when we take a look at this market, S&P 500, initial sprout of volatility for the week, bulls stepped in, they saved the market, bid us back up to new highs. The trend is still up. We're basically closing at all-time highs, no overhead supply. Life still looks good here for the bull case, but there's a couple of cracks, couple of things to still take note of here, especially with the momentum divergence. We're back at highs now. Be interesting to see if we can charge through this level next week, or does this turn into some type of range, double top, hesitation. Those are the things we want to look at into next week. But we have our goalpost set for us. We essentially have the highs here at 31.55. We have the lows from this week at 3,073. Those are the important levels to pay attention to in the short to intermediate term. And that's how you can kind of measure some risk against those levels. So if we go to the Russell 2000 next, you can see the Russell here is still the absolute bright spot right now, excuse me, in this bull case, in this bull market. The IWM now, the small caps, which just broke out from a multi-year, multi-month resistance area where they found sellers effectively showing up underneath or around that 160 area. We broke out just last week. We came back, we checked back to that breakout area this week, and then again, we closed back up here almost at highs. Again, you can see a hesitation with today's date, with Friday's daily candle on the way we kind of pulled off of here. So again, same kind of comments that we just mentioned on the S&P 500. Be interesting to see how we follow this up next week. Do we, do we continue to charge higher here, or do we actually pull back? Does this hold as some resistance? Do we go range bound here for the immediate term? What's important though for the Russell is that we did defend this breakout level. So again, holding above 159, holding above 160, holding above this breakout area is very constructive for this market. We're going to want to continue to see that happen next week and get some distance in between the breakout zone and where price is going. So good defense by the bulls. Let's see if they can add to it, continue to hold into next week. Could be a great kind of rotational candidate leadership group for the market as a whole if small caps continue to act well and outperform. The NASDAQ 100 looks a little bit not quite as maybe constructive here as the S&P 500 in terms of just a relative getting back up towards these highs, but still a pretty good picture here. Again, we kind of had that textbook. We had the pullback, we had the high volatility flare up, pullback right into this November chop in here. So just like we looked at for the S&P 500, you can see the market kind of danced around that 200 area for about 2 weeks before it started to get going a little bit in this uptrend and start making new highs. We pulled back into it. We found buyers. We launched up, and now we're starting to get back up towards those highs. Again, momentum divergence here in the Qs showing itself. If we look at the Russell 2000, a little bit less of a divergence in terms of magnitude, but it's still there. So again, let's keep that in mind as potential negative for the market. So all in all, that's the landscape that we worked with today or this week. A little bit of volatility there heading into starting off the last week of last month of the year, and we'll see how this continues into December and closing out a very strong year for the markets. Now, if we go to other major markets here, we go to TLT. This did close down 1.5% for the week. So you can see it did have this 3-week run to the upside here for TLT. We pulled back a bit this week. We initially were back up, kind of trying to make some progress here earlier in the week, but that ended up giving it back here to Wednesday or Tuesday, I guess, through Friday. We faded right back to Monday's gap down, and you can see TLT is just back to kind of where it was a week or so ago. It's still in a sideways consolidations pattern here, holding pattern in the longer term, so really not too much trend momentum to speak of in TLT. If we go to gold next, you can see gold kind of a similar pattern, had that initial pop to start off the week and then ended up giving it back, closed down just slightly here for gold, but really it's gone absolutely nowhere for the past 4 weeks. It's gone just totally sideways around this 137 zone, still longer term kind of in that consolidation pattern here after a very strong first half of the year. If we look at silver, silver did suffer some technical damage here. You can see down 2.76%, so a little more interesting action going on here in silver as this makes new lows in this pullback here. It's certainly not new lows on the year. Silver, let's see, on the year is up about 6.5%, 7% here. It was up, about 12-15% at one point over here, and now it has certainly gotten cut in half from that zone, or not quite cut in half, but let's see what the pullback was. 16%, which is pretty big for silver in 4 months. So it's certainly given back some of those gains, and it's making new lows here. So this is not constructive action in the short term. This maybe longer term, if you want to put a weekly chart on this, you could probably still draw some type of healthy consolidation happening here on a monthly or a weekly time frame, but certainly in the short term, that momentum kind of picking up to the downside here. So it's in certainly buyers' best interest to step in and support silver before it gets to before that trend continues too much further in the short term. If we go to energy next, energy had a constructive week here, and this probably is certainly what helped. Certainly XLE outperformed this week, but certainly helped the S&P 500 and some of the energy components there outperform and recover the early weakness here, because oil up 6% now, back over 12. And if we go down to that daily chart, you can see lots of volatility here recently in oil, but it's now kind of climbing back up to the upper end of this range. It's grinding higher here. You kind of have this, you got higher lows, almost invalidated here this week, but then a launch back higher. So you can see it's bumping right up against this trend line. So oil continuing to grind. It was a save this week, a lot of volatility, but bulls continuing to keep this alive here and back over $12. Natural gas did get a save this week as well. It was up 1% here on the week. Certainly nothing to be too excited about, just given its relative positioning. You can see the short-term trend is still down. It's trying to hold on to these August lows here. A lot of volume came in the recent days here, so interesting to see if natural gas can hold from this hammer here, from this reversal on Monday of this week. It can be important to watch next week, but good volume. It's in play, but right now bears still have control of the short, intermediate, and long-term trends for natural gas. So that's the overall landscape. Let's get into sectors real quick. If we look at sectors here on the week, you can see energy was the top performer. You can see that it is still in a very rough kind of down channel since really March, April of this year. So structurally still in a very difficult spot, but you can see it's starting to base out here, maybe starting to put in some higher lows and starting to see some accumulation in here. It's going to need to start breaking over really $61, $62 to really get going and really put in a more convincing bottom here for XLE. So there's still plenty of work to do. One of the worst underperformers this year, but shaping up this week, 6% up oil does help. XLP also second best performer this week, breaking out to new all-time highs, consolidated sideways for about 3 months. It's moving higher here. MACD is leading. Good volume coming in. Lots to like there for staples. Healthcare, number 3, also continuing its trend higher, really getting quite vertical here, continues to be vertical. You can see volume drying up a little bit. MACD maybe a little divergence here. Little tired perhaps. It's had a really strong run. It's a tough short. Wouldn't necessarily recommend shorting it, but it's something that it would be, not so surprising to see this pull back and take a breather here, at least sideways through time, if not a pullback through price. On the downside, XLI this week, you can see was down 1%, pulling back. It had this kind of sideways range going here, wasn't fully participating with the market, kind of moving sideways here for most of November. It broke down a little bit, good volume coming in, a little bit of a save here, but XLI looking a little bit rougher here than the rest of the market with some of this supply in there around $82, so not so attractive from industrial standpoint. Consumer discretionary was down slightly this week, still though nothing really to speak of, just going sideways here in a longer term range, still waiting for that breakout. And XLK technology here was down about 0.5% this week. Again, it kind of follows similar to the Qs. Did have that reversal day here on Tuesday. It did springboard higher, but still, it's kind of getting back up towards last week's highs. So we'll see how this contends with this overhead supply into next week. So that is the recap. That's what's going on in sectors, markets, and market environment. So hopefully you guys navigated this week's volatility okay, came out the other side in one piece. Thank you as always for tuning in and watching this video every Friday, every Tuesday and Friday for weekend videos, recap videos like this. You can subscribe on YouTube, follow us on the Trade Risk. Have a great weekend. We'll see you back here Tuesday for the midweek video.